So this is very funny because no one ever asked me this question, and it seems so obvious. Like no one ever questioned why I needed those $20,000,
Right?
And what I would use them for.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey, and welcome to Layer 1. Good morning, good evening, good night. Layer 1 podcast. I've got Dimitri. I've got Alex Masmej with me. I've got a great episode in front of me. Alex is one of the most interesting, definitely like a shooting star in crypto right now, and especially because he's only been around for, I think, self-proclaimed 9 months. But before we get to all that, I want to say welcome into the episode. Thank you so much for the support that everyone's given Layer 1 up to this point. If you're new, please hit that subscribe button. If you're not new, we appreciate everything you've been doing. Please like the video. But again, we do have a good episode. Dimitri is here with me. They kicked me off of the episode on Tuesday, but I am back. So Dimitri, how you doing, man?
Yeah, welcome back, man. It's good to have you back. Obviously, it's nice to switch things up. But yeah, we have an interesting guest today. If you thought you saw everything in ICOs, that's not necessarily true. There's more. I have actually my hoodie that I'm wearing today from ICO Alert. So we are gonna investigate Alex and talk about all the things that he's doing with his Alex token. So let's get into it. Who do we have with you?
Yeah, we've got Alex. I hope I'm saying that right, Masmej. He's the founder of RocketNFT. It has a lot of different things going on, so I don't want to give away everything. So Alex, how are you doing today?
Yeah, I'm doing great. Thank you so much for bringing me on. And yeah, sure. Let's do the Alex ICO review. That would be fun.
5 stars all day. No, we're not ICO rating. Come on, here we go. Anyways, I'm surprised you know all that stuff, man, because you've only been in the space again like a year. So
I started reading about the space in May 2017 before the bull market, but then I'm talking about full time. I started being full time around September, October, around DevCon 5. But of course, yeah, I'm not I didn't just discover Bitcoin right 6 months ago. Of course.
Okay. All right. Well, let's get into it. Before you discovered Bitcoin, what were you doing? You're relatively young. I think based on that Barstool or article that I saw, you're 23 years old. So you're relatively young. But what have you been doing up to the point that you found Bitcoin and crypto?
So my background, I guess, I did a 3-year bachelor degree in Manchester in the UK. So that's why, even though I'm French, I'm bilingual. Then from these 3 years, it was just a business management, pretty basic formal degree that was kind of not bringing much value. But at the same time, I was always in the entrepreneurship school, really passionate about tech startups, really wanted to be a founder since pretty much my teenage years. And so I just learned a ton of stuff there, then graduated straight after, founded a company backed by my university, my ex-university incubator. And it was a 3D printing platform. It didn't do too well, but it was a great first experience to the first founder's mistake. So I guess my background is more I want to be a founder really bad in tech. And so after that failure, I go back to France to live at my parents for around a year. And I decide that I needed to, should I do the long version of my background?
The long version.
Okay, cool.
Just bore everyone. Let's go. No, I'm just kidding. Go ahead.
And so, but I don't have much anyway, right? My track record is still pretty young. But so I arrive in France after 3 years study, 1 year startup failed. And I want to meet the brightest and best person ever that I could find, because the co-founders are the pillar of any great company. And so I try to hang out with the family, which is the biggest European accelerator for startups. And actually they have a young, ambitious people track where they select 20 people. However, the family is the only institution in Europe. And so they rejected me and a couple of friends who got rejected. We created our own fellowship. And at the same time, So I had this goal of meeting as many people as I could. And so from the rejected participants, we created a fellowship of our own, and that was really successful. At the same time, in parallel, I was investigating what is the next huge technology that will boom in the next 10 years that I can influence. And like with the lowest barriers of entry, like the easiest to enter as a young person, I was like 21. So yeah, 2017, like I was 21. And so this, like I was really passionate into AI. I think machine learning and everything is the biggest tech so far to affect mankind. But AI is not really, immediate. Also, you need a lot of data, maybe a lot of funding, just like augmented reality and virtual reality. And I saw crypto, and crypto is literally the easiest industry to enter right now. It's such a nascent space. It's pre-chasm, so most of the upsides is yet to come. And so I just think it was an unbelievable opportunity that I was born at that time. Like people born in and who like people who were 20 in the 2010s, I feel like are kind of a bit more screwed. There's a great article by John Luttig from Founders Fund who just described this, saying like the internet is becoming to be zero-sum game and saturated, and it's really hard. Apart from Stripe, like Airbnb, Uber, that's like 3 big companies. The other ones are pretty much taken. Anyway, fast forward. I meet amazing people. I got the opportunity to be in Silicon Valley for a bunch of reasons. Then I entered crypto in 2019, full-time, basically Peter Pan, which is the summit of MetaCartel. We can dive into it later. Basically sent me money out of a tweet that I did, that I just wanted to go to a big Berlin blockchain conference in July 2019. And from there, I meet MetaCartel. And little by little, I will leave everything else in my life to just focus on crypto. So that's the background, I guess, before crypto. So founding a startup, failing, then creating a community, deciding to focus enormously in one industry to maximize my potential impact, outcome, everything. And I think if you look at the most brilliant entrepreneurs today, they all started with the internet, which is literally what crypto is today in terms of opportunities. So it's literally like the ambitious founders playbook. Like it's nothing new.
How much of an influence was MetaCartel? Because we had Drew Harding on the episode, one of the episodes previously. How much of an influence were they in getting you kind of immersed in maybe just like the niche communities within the space?
They were really amazing because basically, so like I've just been talking like almost 5 minutes straight about startups, right? And so I wanted to find that same vibe in Ethereum. And at the time in 2017, 2018, I was really struggling to find people beyond the infrastructure layer. So when I was talking to blockchain to anyone, they're talking about like proof of stake, proof of work, but I didn't really care. And when I joined MetaCartel, it was the best moment because I had been following them because they're quite vocal on Twitter, etc. And so am I. And so I saw like really the lean startup mindset of trying things on the application layer. They pioneered something that just did not exist before. I just couldn't believe that people were working on layer 2 solutions, proof of stake, proof of work, but like we don't even know. Like it's like building a stadium in the desert. Like we have no clue what we're building this for. And so spearheading this movement, and I joined them headfirst. And that proved to be a wise decision because at the time I thought, oh, I'm kind of late in the game. MetaCartel has been there for a year. They were solving like another technical problem called meta transactions. But actually, it turns out I was pretty early. And now I'm kind of like the core MetaCartel members. And it's just a pleasure to navigate the space through them. I got many connections from it. And they just supported my project Rocket straight away in like 2 minutes or something, like after I told them about this. And tremendous support. We talk about in the Ethereum space, Consensus and Ethereum Foundation and Coinbase as 3 huge pillars to start your career on. And actually, MetaCartel is proving to be an alternative for people who actually don't check the credentials. Like, I'm not really a great scholarly person or a formal person. And it was just an amazing way for outliers to rise. And it's just not me. There's also Cooper from DeFi Rates. There's like countless people. I can't even cite them all, but yeah.
Yeah, well, I want to get into Rocket NFT and DeFi and the NFT space in general, but I feel like we're kind of running up to the story that has pretty much captivated the crypto community for the past 2 weeks, which is the fact that you were able to tokenize essentially yourself, and the idea that you can make yourself an investment opportunity for other people to fund your ideas and essentially fund your life. So for those maybe that haven't been around, like and known this story, go through it at the very base level so that we can have an understanding of how you actually created these Alex tokens, why you created, what was the genesis. I know you talked about James Gallagher publicly trading himself. That would be a great story to talk about as well. So yeah, talk about how you tokenized yourself, Alex.
Okay, sure. So basically, again, going back to the dichotomy of a startup and crypto, in startup world, there's something called the income sharing agreement, which is something that's been more and more popular lately with Lambda School and other educational schools that align interests, but basically giving it education upfront for free and then taking a percentage of that salary. And so I've always had this on the back of my mind, because every time I talk to these people, including James Gallagher, they always say, well, we don't want to do crypto yet. It's great to just do this kind of legal contract about, claims on revenue, etc. Separate from crypto. It's a nascent space. Let's not entangle too innovative space, because it will just multiply some mistakes and people are just not expert in both subjects at the same time. And so, yeah, I can talk about James Gallagher as well. So James Gallagher pioneered the ISA movement himself by doing lots of research. And he was the best guinea pig, because he's so exceptionally talented and young that he decided to publicly trade himself for a while, which means that he became an ISA, not just for education, but for his entire life. You could buy shares of James. And also for the funny aspect and engaging element, you could vote on some of James' life choices, like for instance, his diet. And so the people who backed him were very smart people and advised him to go for a pescatarian diet, which is only fish is okay. And so overall pretty healthy and not as restrictive as veganism. And so anyway, and lots of decisions like this, that was really cool. He stopped it because there was a fun experiment, but then people could kind of get bored of it. And, I think this kind of fundraising mechanism, ISA, I can delve into it later, is a great way for, people to exploit their potential. But in the case of James Gallagher, he's already exceptional and people know already about this. So the value kind of stopped at a point because he's just going to do a startup. He's working in tech right now. Anyway, so this whole idea of tokenizing himself or herself is basically that you want to get financial upside against something. So there's a few use cases. The first one is a freelancer. So let's say you're a designer or an engineer, you can sell with tokens a block of your time, like 1 token equal 1 hour. This was first done in crypto by Dabboy, which is a designer that is now working at Dharma. And so he's an awesome engineer, very high demand market for his kinds of design. And so he tokenized himself. And so he made a bunch of money from it. And then he got hired by Dharma because he was just so good that he got snapped up. And that was a great, PR stunt for him. So that's one use case, a freelancer use case. And not just that boy, there's also legal engineers. So people who are both lawyers and smart contract developers that have a unique skill set that is very rare. They also tokenize themselves, and that's really smart because a lot of people need that advice, need that kind of freelance. So that's one use case. The other use case is marketing, signaling. So Amin Soleimani, pretty prominent person in crypto, founder of Spangchain, a network industry startup. He basically tokenized his retweets because he has 10,000 followers. And so, yeah, so basically time, marketing, and then the biggest one is ISA, claims on revenue. And I think in the mainstream, it will be very popular. There's multiple categories, maybe artists, music artists, hip hop artists starting up. If you bet on them early, they get cash up front so that they can finance their funds, or athletes, right? We've seen Spencer Dinwiddie, the NBA player, tokenize himself as well. And then influencers on Instagram or TikTok that will go huge in value with some sort of terms and deals. And so they could get also cash up front. And so the fourth category, which is perhaps not the biggest one, and the one I'm in, is entrepreneurs, founders, basically raising raising like a pre-seed investment pretty much. It's like, I don't have a team. It's just myself. And it's a claims on my revenue, not my equity. So the upside is not as huge. But the reason why I did this is because I was making a bit less money. Yeah, we can talk about this later. I've had like a bad DeFi experience, which made me lose like a non-negligible percentage of my net worth. And and yeah, I just wanted to do this because also narrative fit. Like I'm quite good at marketing so far. It's been going well. And I knew that, as I said, the crypto people don't really know about ISA much. The ISA people never wanted to try out crypto or dive into crypto. And I was one of the only people in between those worlds. And I think that's why I got like some media coverage out of it, is because people were really interested into this new thing that no one did before. Because I think Spencer has been delayed because of the crisis and COVID-19 and everything. And same, James Gallagher and other before him, that there's only 2 people in the world who did this before, never got to do it with crypto.
Yeah, that sounds awesome. So just to dig in more into it, so the actual token, right? So if somebody purchases this token, like what does it give you, right? Does it give you, access to you to, for me to like ask you questions about how maybe what would be the best way to do marketing and so on? And also, is this, token, is it going to be tradable token, or is it, just kind of fixed, token, like doesn't really have a price in terms of dollars?
Yeah, absolutely. So Alex tokens has this, actually brings all domains together. So it's a ERC20 normal tradable token. There is 10 million tokens minted. It's been done by Tri-Roll, who's a company that helps me with like marketing, and also they put skin in the game. So they put a bit of liquidity in my token so that it's more liquid when trading. And so my token gives you some of my time. So I wouldn't call myself a freelancer because I want to found companies, but I would say as an advisor, if you want feedback on your application, on anything, or if you want some of my advice, whether in startups, crypto, or anything, you can get some of my time. I can introduce you, for instance, to DeFi, maybe introduce you to relevant people. So anything compared to like my time, but more an advisor than a freelancer. That's one use case. Second use case is marketing. I can do tweets. I have done tweets for money, and people don't even realize this because usually it's like genuine. Like I like the project. They also like happen to want to pay me so that I retweet them. Well, fair enough. So that's the second use case, marketing. Third use case is for 1 million of those tokens, you get claims on my revenue. And so this is what made like headlines in the small DeFi world in the past 2 weeks is out of the 9 million, there was a special 1 million that I have dropped against OTC $20,000. So OTC means directly to my wallet. When you buy Alex on Uniswap, I'm not the sole liquidity provider. I don't actually get most of the upside, but you can do that and then get some things from me by sending it to me. The 1 million token was like a special form that you had to complete, and I airdrop you the money versus you give me the money. So I have a wallet, Masmej, which is my full French last name, .eth, that has transferred all of this. And so some people say it's a bit confusing. We might actually, wrap the 1 million Alex token kind of like a preferred share. Like this is the Alex token that both has the utility aspect and also has the claims on revenue, so that it really differentiates from the previous 9 million, which are free trading on Uniswap, and you can trade and do and leverage DeFi with it. You can long, short, or do whatever you want with it. And it just gives access to the utility, which is freelancer and marketing.
Well, we appreciate you coming on the podcast, even though we don't have any Alex tokens and we couldn't get any of your time. So
to you also, like, I could also drop a special link on this podcast that you put in the description. So I give like 100 free Alex tokens.
Amazing. We'll do that. So you guys are here, and go down to the description. We're going to have that set up post episode. We'll have that ready to roll. All right. So like I said, and like Dimitri said, we worked at ICO Alert in that 2017 craze. And obviously there's like some parallels with crowdfunding companies at like a pre-seed round and things like that. Dimitri, you want to show that off real quick?
Yeah. Boom.
ICO.
Yeah, so we that's ancient history now. It's 2017. It feels like 20 years ago. But what parallels do you see when it comes to the ICO craze? And then how do you kind of take the stories and obviously the boom and bust of ICOs, and how do you take good from that, as well as what like negatives do you see around ICOs that you know, you could foresee as like problems that might come up for this kind of crowdfunding method?
Right. So my view on the ICO space is that there was a lot of excitement and hype, and the product was really making money. I don't think people really were in for the products they were buying for. They just thought it would 1000x and they would get rich. And so, the huge problem of this is it was a lot of the leverage, the decisions, and the power were to the founders, and so that was a bit of a problem because the founders had unlimited upside, uh, almost no drawbacks, bottlenecks. They just could raise money that way, and it was pretty crazy. I would say people call this like a human ICO sometimes. The main difference is that first, it's a way smaller amount. It is also akin to crowdfunding, but it's kind of like people are generally betting on my future and they are not there just for the financial upside. And the clear reason why is because most of my VC connections said, I am not buying your token because it's almost philanthropy at this point. Because my guarantee is that I will 5x at most, because I raised 20K. I said I will cap it at $100,000, which is capped at 5x. And so there is a cap on the upside, and people are just want to be early in my life, and they just want, and it aligns incentives better because now the people who invested in me, they actually, it kind of completely removed the boardroom gatekeeping model of old people, because now they're incentivized to help me out. And I have a lot of awesome people in the space that backed me. And so all good for me. There's really a relationship that's being formed that was absent in ICO. Mine is capped, so the people who are there are here for the 3 years. And so I would say that would be the big difference.
Yeah, I guess the naysayers would come in and say, based on this idea, it could be bastardized just like the ICO, right? Like, I think the ICO just is still a great idea. I think what you're doing is a great idea, but somebody somewhere out there is going to take this idea, raise $2 million, $10 million in freaking exit scam, right? Like that's what the naysayers would say. So how do you go around these regulations? It was the $100,000 cap a product of maybe staying within some type of regulatory framework?
So I have not done any regulatory framework. The settlement layer is just Ethereum. The reason why I chose not to go through like an obvious route, which could be security, making Alex a security. First of all, there was a utility element that from before. It's a closed participants that I can KYC everyone. Like for the legal aspects, I just thought that the marketing was really sane. I said that I could run away with the money, and this is really a huge bet. The upside is capped. This is not some get rich quick money schemes. People are aware that I can totally fail and not make money. And so the utility plus all of these kind of precautions that I take, I think do not qualify this. It's a pioneering thing. No one else has done it in the world. I'm happy if there's any problem to, retroactively wrap this sale into a security, because I know a lot of founders in the space trying to build templates for, security tokens only for claims and revenue. A big one is Ferment, which does this for companies. Ferment is like the CSO, continuous security offering, and it's for companies to sell claims on revenue. So I'm basically a CSO for individuals. So maybe I consider maybe the ISA Alex token are precisely securities, but because of the other thing that Alex brings you, and because the fact that it's capped and there's a lot of disclaimer, I think is in the gray area, and I don't think I would need to do huge legal framework, but I'm happy to do so in the future if there's any problem. But I don't think I've had any so far.
In terms of where these funds are going to go, is usually we ask ICOs, what is your kind of plan and roadmap for, maybe for the funds that you raised? How are you going to spend it for those investors that are listening to you right now?
So this is very funny because no one ever asked me this question, and it seems so obvious. Like,
Yeah.
no one ever questioned why I needed those $20,000,
Right.
and what I would use them for. So right now I am basically like co-founder flirting, which means like I'm starting projects with friends, but as long as I'm not really VC backed to anything, it's not marriage, right? So because I'm still kind of flexible, I want to move to the place where I can probabilistically find the best people to ever found a company with. And I believe this is San Francisco. So I will fly out to San Francisco. Since I want to found a company there, I will also get a visa, meaning that this 20K will partly go into issuing a visa for me. So that's one part. And then, yeah, I guess it would basically buy me 5 or 6 months in San Francisco, where I have to, like produce some magic in those 6 months that are very strategic in my life. But I think that's a bet I'm willing to do. In October, I got into crypto full time, and I was just eating my ICO 2017 upside savings. And I had no revenue or anything. And I just jumped straight, and it really worked out. And so I feel like jumping straight and forcing my future by going for it for 5 months with $20,000 visa SF, I think is also another great bet I'm willing to take. So extremely risk taking, totally not totally not risk adverse move, but basically, yeah, I will be a founder in SF. That's why I need the money.
But yeah, going to the mecca of tech is definitely the strategy if you're looking to, start any companies, and especially within the time frame that you mentioned. So what happens? Like, okay, so 3 years, right? So what happens? Let's say things don't go as well in 3 years. So after 3 years, does it mean like the whole thing expires, or what happens?
The Ukrainian bear here.
Yeah. Let's we talked about the upside. Let's talk about, let's see what is there. Kind of part of the contract there. That we're getting into here for 3 years.
So one thing I would say is that I will keep constant communications, and that I almost foresee that there will be changes in the contract as we go along, and we collectively figure out like how to make this work best. So I would say that for now, we're sticking with 15% of all income perceived. I will try to transparently show, I don't know, tax returns or whatever documents proving I made some money. To be honest, one enormous component of those 3 years, and I thought about this from the start, like I am not a trader, but if I do decent treasury management, this 20K could just really grow regardless of my entrepreneurial feats, right? Just because Ethereum for me, and I'm just very bullish on ETH and Bitcoin. And so I will, like, those $20,000 are in a token set, which is transparent, DeFi trading takes the emotionality of trading, and I just have returns of that. So anyway, yeah, the downside is maybe I don't repay, but I don't think this will happen. I think the most likely scenario in case of a downside event would be I give the money back to everyone plus inflation and compound rate, which I will calculate, but I think would be not too hard to repay. Like, let's say, yeah, at worst, I will repay like 25K in 3 years to the investors.
It's interesting when you talk about the generational kind of effect that we've had seen with people within their 20s and 30s, kind of like bereft and not growing up at the right time, quote unquote, and kind of the shift towards maybe the gig economy and things like that. This seems to play a perfect role in that society where maybe 30, 40 years ago, something like this couldn't have existed. I know that's kind of a little bit general to be throwing out, a little bit obvious, but where do you see kind of the tokenization of people going? Like, I understand like you're one of the first, Spencer's one of the first doing this, but like down the road, 20 years, maybe 10 years, what is something that you see based on this tokenization of someone's self what are some like cool ideas that you see there?
I think it would really grow extremely popular, and that everyone kind of like followers on social media, I feel like there will be market cap of people. And this might sound dystopian to some, but I think maybe it will be like a kind of like opt-in economy and people will just like not be on those platforms. But I'm pretty sure this will be enormous to basically find someone else that believes in you and is willing to back you. And there will be almost like specialized scouts in personal tokens wanting to buy people, or maybe to minimize risk, to buy a basket of people. So I believe like a really common idea actually is the basket of personal tokens. Like for instance, there's this great San Francisco startup called Pioneer that is a hackathon that every month just selects like the top 10 out of like 1,000 more people. And every month they select 10. And the advisor are like Balaji, like very famous ex-CTO of Coinbase, etc. And so I would bet, I would invest in a basket of the 10 people. I think that would be an extremely great bet. Or, Forbes 30 under 30 or any other credential that you think is worthy. So baskets would be great. Also, one other thing about basket is that you don't have to be, a public community persona. That's usually a big part, like hip hop athletes or, influencers. They have a lot of followers. The reason why myself was successful is because I have really engaged followers. I don't have a huge following, but almost half of my raise was people I didn't know, just followers on Twitter. So, but for people who don't really want to optimize for Twitter followers, they can just be part of baskets. And so I think that's a great idea.
Awesome. Well, we talked a lot about this human ICO, quote unquote. I don't know if I like that term so much, but I like the process and what you did here with this raise. The last question I have about it is, how did this Barstool article come about? Because I'm sure you've gotten a ton of press or a ton of interest since that article actually dropped. And then we'll kind of hop out and talk NFTs, talk DeFi before we wrap up.
This is funny. Well, to be honest, I did not know what Barstool Sports was. I am French. I lived briefly in the US last year, but like I had no clue, and everyone just congratulated me, and I didn't know why. And to be honest, they called it kind of like at the end of the hype cycle, so I don't think there was much repercussions. But yeah, basically what happened is I had like the block article. And then I had a bunch of other articles from different languages. And Barstool was like the end. So they kind of saw it last, but it made a lot of noise. And that was really funny to see something outside of crypto, like, contributing to mass doing my part. So yeah, that's like, I have no stories to tell. I don't know anyone there. I have no clue how they landed this piece, but it was very hilarious.
Yeah, I think there's going to be ripple effects from that article that you might not know about, right? Like that mass adoption you're talking about, it's going to get ideas in front of people that maybe wouldn't have had those ideas before.
Yeah, like one obvious thing is that as soon as I did it, tons of people got back to me saying, I want to do this as well. I am a freelancer. I'm an entrepreneur. I am X. I want to do this as well. And then on the other end is a ton of crypto founders telling me, hey, I'm doing this new startup. What do you think? Blah, blah, blah. Can we have you share this, because like I'm the sharing point for personal tokens. And so, yeah, there's a lot of ideas for entrepreneurs and also for people wanting to tokenize themselves.
Let's talk about that DeFi moment. You talked about DeFi slippage. You had some type of moment where you lost a significant amount of your net worth. What happened there?
Yeah. Okay, cool. So this is like exclusive. I don't know why I didn't say it before, but like basically I had like savings. I don't want to say the exact number, but I had savings which were literally my entire net worth. And I wanted, and it was in a set of token set. I'm a big fan of token sets, by the way.
And you immediately put it into DeFi. This is the risk taker right here.
Yes.
I am the like short attention span, like not the smartest decision-making person. And so this is why I use token set, because they take away this element. And I thought I was safe. And nothing is token set fault. It's just, I talked about how great, one random crash, not the Black Thursday, one random crash saved my funds pretty much. And someone on Twitter commented and said, hey, you should move your token sets to this one, which is the same, but when it does sell the crypto, it rebalances into interest-bearing tokens, CUSDC in particular. So you get 4% APR on this while you are selling in your trading strategy. Anyway, and so I was like, oh yeah, that's pretty cool. And so I realized that the other token set that I want to move on is in CUSDC. And so the trick is CUSDC is extremely illiquid in Uniswap. Anyway, that's the end of the story. But basically, I got everything out of my token set. At the time in token set, that's also a barrier to mass adoption. It's like you could only invest in the token of that token set at that time. And so that's why I had to switch all my ETH to CUSDC. But now this has been resolved because token sets last week, I think, released something where you can enter with DAI and a lot of really popular cryptocurrency. So that's great. By the time we couldn't. So I had all that ETH. And of course, I'm still like a DeFi Power user. I know about slippage. I'm not that dumb. And so I go into a DEX aggregator so that, we maximize liquidity. I'm sure like there's some people in the audience know like maximize liquidity. And so that you can do like trades and different ones and it should be okay. So the first one I think of, like now that I know more because I've been wrecked, the best one ever is 1inch.exchange. Like this is just the one that's been putting the best effort, most funded on Bitcoin grants anyway. And so I don't think about them at first. I think about dex.ag and I go on dex.ag and I swap 40 ETH to CUSDC, but I don't find CUSDC. And so it should have ring a bell. CUSDC is illiquid. Do not swap into CUSDC. But I didn't care at the time. It was pretty early in the morning. I don't know why. I didn't care. And so my second thing is, I will just probably switch to another one. And I think of another one because I'm biased by my French nationality. And it was a week before EthCC, the big Paris conference. And I think of Paraswap. And sorry, Paraswap, but basically, and I've been in touch with the CEO and the team and everything, but Paraswap is the bad platform because I got my 40 ETH and it converted with 75% slippage. And so you might be like, well, you did the transaction and it's fine. And, DeFi is very young and thing. But when I did the swap and I got wrecked, I took a screenshot of the UX and it's really bad because basically what happens is like, because they want traction, and the DEX aggregator space is very zero sum, so winners, losers. They always advertise Paraswap best rate. They hide the slippage, they hide everything. And they allowed for the CUSDC in the thing. And there was no USD conversion, and CUSDC is not 1-1 peg. So I just thought, I received a bunch of CUSDC. There was no USD conversion, but I couldn't know. But when you look at it closely, on the result, there is the best rate, slippage is just a dash, like nothing written. And the second one is Uniswap, 100%, 75% slippage. And this was the same transaction. And so as soon as this happened, I'm on a call with the CEO, really sorry for me, tells me that, DeFi is very young. This is not insurable because Nexus Mutual, where they are insured, do not cover things outside smart contract risk. And so this, I felt extremely, extremely bad. And they did a UX fix. They never got me any bounty or anything. And so that's why I'm not really investors with them anymore. But I never wanted to, do bad advertising. But so what's hilarious about this story, and I'm telling this for the first time, is that this was 6 days before my main stage talk in ECC about personal tokens. And this is where I'm like, wait, I have never been more broke in my life. I am going to wing it and announce a $20,000 raise. And this is how this idea came about. Anyway, first time I'm explaining this. I'm not sure, is it too shocking to be released? I don't know, but yeah.
No, that's awesome. That's a great story. Actually, it reminds me of when I was wrecked too, before in trading. So I come from Forex background, and there are instances where the slippage is a huge thing, especially when you trade some illiquid currency like ruble or something like that. And there was a story of somebody that actually traded for the first time, and they only see the first layer of liquidity. They only see the best price, but they don't know how much liquidity is behind that, right? So they hit the order, and then their execution is terrible, so they get margin called right away, and then everybody is upset. So I think DeFi definitely is very young, so there's a lot of things that from the UX standpoint, people don't realize, traders, when they look at the numbers, and they don't really know what's behind it, how far is liquidity is available, and how much I can get slipped there. So that's an awesome story. Thank you for sharing. And let's talk about Rocket a little bit. It's very interesting. You founded, right?
Yeah.
The Rocket, right? And
Yeah.
it's interesting how you mentioned earlier in the interview how you wanted to be a founder, right, of a company, and you were exploring different things, and you started something that didn't really work out, and then you continued to work to be a founder of something else. A lot of people, they like they want to be a founder just because they want to have the name founder, but they don't really actually want to be a founder, right? So they tend to like kind of fail and then drop off. But it looks like in your case you are you actually want to persevere and like continue to be that founder. So like what made you kind of decide on creating the Rocket? What did you see? What was the opportunity in the market that you saw that you could capitalize on?
Sure. So between July and like November last year, I was extremely passionate and involved in the DAO movement, first part-time before going to the space full-time. And so I was really into DAO, which is, a revolution in governance. I can explain this later, but anyway, that was really huge for me. But then like, of course, DeFi is by far the biggest use case of Ethereum. And so, of course, I knew a lot about DeFi and everything. And I questioned myself, like, how could DeFi integrate with other things that I know, like DAOs? And what are the pain points in DeFi? And so one that I saw was the fact that in DeFi, you can't do any loans. Like you can't do any unsecured loans. Maker is 150% over collateralized. Same for Compound. And so, or Aave on the main platform, because they're trustlessness. So they don't want to have to trust people or anything. And so I started this community called Under Collateralized DeFi, which sparked a ton of discussions about how to make this happen, how to actually give more money to people than they put in. Because in Compound and Maker, you literally put more money in than out, right? And it defeats the purpose of a loan, which for me is 99% of the market. And funny enough, Rocket is still over collateralized. But the way I came up with the idea of Rocket is that I did like basically a survey about like what other collateral than crypto like ETH do you have and could be useful for a token that we can trustlessly check and trustlessly sell. And a ton of people replied NFT. And that like in hindsight, it was kind of obvious because my following on Twitter or whenever when I shared this, like they're all in crypto, they're all crypto natives. And so I decided, well, let's mix for the first time DeFi and NFT. And I basically did it the very lean startup way, because on the liquidity provider side, it's simply a DAO of people who pull the money together and they decide, who to agree on giving a loan against the NFT. Then we have a multi-sig to hold NFT in a secure manner so that we don't, if someone loses the key, like it's still safe. And that's it. It's a DAO and a multi-sig. And we built a brand and we basically publicized it as a DeFi pawn shop. Like it's basically we take against any asset that we think are valuable. If they default, we liquidate on OpenSea. We can value with a ton of different analysis, but at the end of the day, this is not exact science. We don't exactly know because NFT are low demand, low market demand. And I think just like my ISA was, in between ISA and crypto, the fact that Rocket was in between DeFi and NFT and DAO was really fascinating for the space. And so I got a lot of enthusiasm from it. We did a lot of great loans, and it was a lot of first ever gold-backed loan, first ever virtual mortgage with like Decentraland back loan, and ENS back loan last week. That was pretty cool as well. So yeah, this is basically how it came about, like trying to do alternative types of loans in crypto.
Yeah, you do a great job explaining kind of the different terms within crypto, even though you've been around maybe not as long, although you said some of that was part-time. I'm interested to hear, for those people who maybe are just dabbling within NFTs for the first time, how would you go about explaining NFTs to that person? And I've heard a lot of talk and they're really picking up traction. Layer 1 took part in that sandbox sale. So we are kind of familiar with the NFT space, at least in a little bit of fashion. Are NFTs the answer as far as like adoption? And how would you go about explaining that to maybe an average user?
Well, NFT probably is one path to mass adoption, because if we look at crypto, apart from speculation, what was the biggest success so far? And it is CryptoKitties in 2017, which will really blow up. And so NFT essentially are digital items. And so this can represent a lot of things. First, this can represent anything virtual, so game collectibles, domain names, crypto art. There's a lot of a niche called crypto art, which is basically like beautiful GIFs, right? That are extremely in demand of really famous artists. But also NFT can tokenize anything that's just not money, not fungible. And if there's an oracle or like, derivative of some real world assets, an NFT could perhaps represent a house or just anything. And so NFT is a revolution in ownership, because owning something doesn't require any third party. And even though this explanation is very theoretical, it's really amazing in practice, because that means that you can use your ownership into all the other things, accepting that standard. And so that means like anything you own, you can sell it, you can trade it, you can exchange it, you can bet it, you can give a loan against it. And so it just brings the whole magic of crypto to any token or any asset that is probably ownable on this NFT.
Are you matching the loans
yeah.
other with lenders, or is it you that's the one that's or the actual platform has some capital that they'll lend out?
Yeah. So RocketNFT, we did raise a little bit from MetaCartel, a grant, Gitcoin grant also, but the main part is the liquidity providers. So I think we have like something like 15 or 16. We basically closed it out pretty quickly, because since it's it's a DAO that's pretty simple. And so if you just arrive just before loan is due, you can get the dividends and just run away. And so since the framework that we use is not that complex, we basically stopped taking membership into that liquidity provider pretty early on. And we raised around $20,000 worth of ETH, which was really great, because following this was a bull market. And so we had like $50,000 to give out to lenders. And then that was before the Black Thursday that completely wrecked it down. And so this is why Moloch V2, the new framework, is really useful, because it can accept other types of asset than ETH, like DAI or stable coins, or even like token sets or any ERC20. Anyway, so that's the first question. So we have liquidity providers. They provide, like, of course, like people in the team, Rocket, that actually provided funds, like as a sign of confidence. But I guess 90% or 80% of the funds are external. Mm-hmm. Anyway, so that's the first question. The second question is, how do I value the NFT? So yeah, first we look at collateral types. What we learned is that virtual real estate is the best one. So another thing is we look at collateral type. We also want digital crypto native items, not real world assets, because although that market is probably enormous and way bigger than the crypto native one, you need oracles, you need trust. It's way harder to do that. And so we just stick to crypto native. And so in that crypto native assets, we look at the collateral type. And the best one so far we've seen is virtual real estate, like Decentraland, CryptoVoxels, Sandbox. Why? Because there is very little inflation of the real estate. There is demand. And these games are a bit beyond games, because you can rent them, you can play games on it, you can do some sort of virtual meetup there. And so there's multiple use cases. So it's the popularity of this game perhaps will last longer than just the traditional gaming NFT. Because if the game just is less popular than before and there's a fad pretty much, the NFT price just shuts and just like tanks, like CryptoKitties did, and maybe will happen to some other games. So virtual real estate is perhaps the strongest one, because even people in real estate that I've met like are into virtual real estate, because they might think, well, this is huge, especially with the coronavirus crisis. People are going to remote. This might be the future. So anyway, collateral type, and then past transactions, average transaction for that NFT, also reputation of the person lending the tokens. So we've had an ENS domain lent by the chief of operations at ENS using his own first name, which is extremely needed when he explains it to clients or anything. And so this was also a huge part. So reputation of that person, but you can choose to be in Rocket anonymously and get a loan anonymously, but you would need a very solid one. So we had like an anonymous person came up with a $200,000 decentralized parcel, like 400 parcels. And so I was like, yeah, sure, you can be anonymous. Like, we don't need more to be convinced. Like, this is a lot of money. That's fine. And so, yeah, then crypto art can be cool if there's enough. But usually we basically de-risk the investments by being way over-collateralized. But it's still fine because the people will get it back eventually, and it kind of generates money out of NFT that was just not there before. Kind of like Airbnb. Your house was not producing money before being lent out. So creating wealth and creating new interesting DeFi stuff was the main motivation, but there's not exact parameters as to how to price them.
So what I'm hearing is I can't lend out my CryptoKitty though. You guys are only doing virtual real estate, man. What's up? I want to use my CryptoKitties that are basically worthless at this point.
Well, unless you have like CryptoKitties Gen 0, like the most valuable one, and you have a lot of them and you're asking for a rather smaller amount, perhaps we can talk. But
yeah, I was interested to see as well that you're not a gamer yourself. You're on the bleeding edge of a lot of this stuff. You're in the NFT space, which is closely aligned with gaming. Do you not like see? Do you see gaming as part of that adoption, mass adoption as well?
I've been to some NFT conference since Rocket, and yeah, for sure, most people there are in gaming, like Jiho from Axie Infinity, other people like even OpenSea, the company like has a lot of gaming NFTs, probably like most of their traffic. It's an NFT platform. So yeah, I would say so, but gaming is the number one case. I'm not a gamer, but I respect that type. But there's also, art as well with Non-Origin or Super Rare, which are artist platforms where it's a novel way for them to monetize their content. So that's pretty cool. Or there's other things than gaming. But gaming is definitely probably and by far the biggest in NFT right now. Yeah.
Gotcha. All right. So we're running up to the end of the episode. I think we have like maybe a couple more questions for you. One of the questions we always like to ask, especially for those that are maybe like located in other parts of the country, we're obviously, or parts of the world, because we're obviously in the US. What is the blockchain space like in Paris? Because we had Sebastian Bourget from the Sandbox. It seems like you guys like have a good amount of people working within the blockchain and crypto space. What is the crypto space like in Paris?
The crypto space in France, I would say, is rather small, but it's quite exciting. France always had a lot of engineering talents, so there's some great companies. I would say the Garage is cool. The Garage is a networking space. It's also a VC firm called Star Chain. They're both linked together, and so they are backed by the family, which is like the biggest startup thing. So that's pretty cool. Then there's the Consensus arm in Paris, which is pretty great. They leverage best the Paris ecosystem, which is a lot of great enterprises and corporate companies. And so this is, I think, what is specialized in. And it's a great way for them to, once they have their footprint with Consensus, move on to other projects. And I think that's what people from Sandbox did. Sandbox has some French people that were ex-Consensus employees, I think. And so, yeah, I would say I'm not too involved with the Francophone people because I was most of the time in the US last year. But I know there's some great French people all around the world. One of the biggest thing in crypto was you can pay Forbes reading paywall with a company. I forgot the name of the company, but basically you can pay the paywall with ETH. I'll just tell it later. But that's a French company in New York. Fairmint also continuously offering its French people as well. So yeah, the French ecosystem is not as big, but there's a lot of cool people there, definitely. And look out for French people in other areas, like I will be in SF.
Yeah, and absolutely, you guys have the Ledger there as well.
Oh yeah, of course.
Right, that's a big one out there. So yeah, before we wrap up, I want to ask you about the overall DeFi space, right? You mentioned your story, right, and the struggles that you had there. And overall, the DeFi space has been kind of in making the headlines, right? Because there's certain things that are getting exploited, and it's kind of constantly evolving right now and trying to be ahead of the exploiters or somebody who's gets to find certain bugs. But they're always trying to kind of catch up, right? They're not always in the front of it. We see all these issues that are happening in DeFi, where it really puts the whole organization in jeopardy in terms of it being functional. What do you think? Is this something that we really need to go through in DeFi to be better, or what is kind of your outlook for DeFi space given like the issues that we're dealing with right now?
Yeah, totally. I think DeFi is still very young, but although like the really bad slippage experience that happened is now completely fixed. So with token sets, you can enter in a different currency, or now the CUSDC is basically USDC that is then wrapped. So even on the back end, it's getting way better. I think on the front end, we need to give less choice to people, like be more opinionated to what you show to users. And also, so that's a second thing, which means like, users cannot do slippage. Users cannot, do a transaction that will obviously fail, or something like prevent a failing ISOscan transaction because the user did not prevent some things, or kind of other blocker. And then the third one will be insurance. So always insure the user, even if they don't want it, they probably would love it when they lose funds. So I'm thinking about Open right now, because Open, unlike other insurance platforms, insure against any risk. It's just an option that you can get out. And so there's this cool project called SafeDie that is really cool, that is basically building like a CDI with options integrated into it. So that means that you get your yield that's a bit smaller, but at all times it's insured, and there's like some milestones you can redeem your CDI at. And so I thought that was really great. So yeah, give less features. Also, always integrate insurance. And the first one was, it's getting faster. People are starting to understand the problems and everything. And it's great that we do these kind of mistakes at small scale, so that we actually are ready for prime time. Unlike, the centralized exchanges and KXs that just lose hundreds of millions of dollars because they already achieved some kind of massive traction. So it's good that we do this now.
All right, this is the end of the episode. We do have one final question, which is a book recommendation. It could be non-crypto, it could be crypto. What do you got for the viewers and listeners out there?
One book that's really amazing about artificial intelligence, so totally not crypto, and the possible scenario of our future is called Live 3.0 by Max Tegmark. And I think it's a really fascinating book. It starts with a novel about a world where someone discovers AGI, so like all omniscient AI that controls the entire world. And I think it's fascinating. And I'm pretty sure that after my 10 years in crypto or so, I will probably move to AI or space or another industry. But for now, I'm really enjoying crypto. And yeah, thanks to you guys as well.
Thanks, Alex. We appreciate you coming on today, and good luck with everything that you're doing, man. We'll make sure to follow you, and we look forward to talking with you in MetaCartel chats as well, man.
Yeah, cool. Awesome. Thank you so much, guys.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer 1 on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.